So I buy $1 million of gold. Okay. If the price goes up, the gold miners, first of all, the gold miners are going to create more gold and dump it on the market. If I could eliminate all gold mining forever, if I could wave a magic wand and make it impossible to mine any more gold, my $1 million of gold will hold its value better because it'll be scarce. But gold miners are inflating the value of the supply of gold by at least 2% a year or so. And then if the price doubles again, investors will invest in more gold miners and they'll create more capacity to mine gold. So you'll create capacity to mine gold, you'll mine the gold, you'll crank up the rate at which the gold mines function. After that, people with gold jewelry will melt their jewelry down, convert it to gold bullion and sell it, right? If the price of gold went up by a factor of 20, you would be like converting all your gold stuff into gold bullion because it seems like a good idea. They call it scrap gold, right? And then after that, bankers will issue gold warrants and gold paper and gold derivatives, and they'll sell them short without the gold because they can speculate in it, and they don't have to have a one-for-one coverage of gold to the gold derivatives. And so that's called hypothecation and rehypothecation. Okay, if it keeps going up, the governments holding gold will start to sell some of their gold to manipulate the price down. Right, and all of these, and ultimately, if it goes up enough, someone will club you over the head and take your gold, or a hostile regime will take your gold, or a politician will pass a law taxing your gold. Right? There's a lot of ways you lose gold because it's physical. How do you cure the problem? Right? I mean, here's how you cure the problem. You make it impossible to mine any more gold, and then you make it possible to take custody of your gold personally off of the exchange or off of the bank. So that way the bank can't hypothecate it or rehypothecate it. Miners can't inflate it. Investors can't create any more gold miners. And then you make it possible to move it from here to Switzerland or Singapore in an hour for a nickel. And that way, if you don't like your bank or don't trust your bank, if the state of New York passes a law taxing it, you move it to the state of Wyoming. You know, if the government passes a law taxing, you know, the ownership of land in California, you can't move the land out of California, can you? If you have $1 million of gold in a bank and in a vault in New York City, you know, there's only a couple of places you can move it. You can move it to London if you have 6 months. Okay, so you're going to be subject to the law of London or the law of New York. Can you actually move to your favorite island, or, you know, can you move to the Cayman Islands and bury your gold underneath your hut in the Cayman Islands and be safe about it? Not likely. Can't even get it through the airport, right? So the problem with other properties, and gold is the simplest example, but the problem, the challenge or the analogy holds with any property. I give you a bunch of money and I tell you you want to keep it and give it to your grandchild. Do you buy a building in Manhattan? Do you buy a ranch in California? Do you buy a stack of gold bars? Do you buy shares in a company headquartered in San Francisco? Do you buy bonds issued by a government or a company? Or do you buy Bitcoin? And you can see the problem, of course, is the debt is devaluing rapidly. The land in California can be taxed and is not movable. You know, the building in New York is not going anywhere. It might be valuable to a rich person that lives in New York. What about a rich person that lives in Beijing? Do they want your building in New York? How are you going to hide your building, right? Buildings get property taxed. There's a very famous story about, you know, a bunch of luxury, you know, yachts sitting in Sardinian port, and the locals decided that it wasn't fair that all these rich people were sitting on their yachts in the port, spending all this money, but they weren't paying enough taxes. Now, they were putting millions and millions of euros into the economy, but they came up with the idea that they were going to put a tax on the yacht, on the value of the yacht. And so they passed a yacht tax that would have cost people millions or tens of millions of euros if they stayed in that port. and everything was happy, and all the restaurateurs and the hotelers and the entertainment people and the port, they were all happy, making tons of money off the yachts until the day before the tax went into place. And the morning that the tax went into place, the port was empty and the economy died. Everybody left because yachts are floating capital. It just moves. It's floating property, right? So it's a very visible example, right? Why it's not that smart to put an unfair tax or an extreme tax on a yacht if people can float the yacht to the next port, 100 miles to the left. So one would be discouraged from taxing stuff that floats. On the other hand, taxing a building that's buried, 100 feet down in the bedrock, that's easier. You can't move the building. So Bitcoin represents the apex property rights of the human race. Like I'm not disputing the ability or the, legitimacy of a government to pass a tax. At the end of the day, they can tax your gold, they can tax your stocks, your bonds, your building, yourself, your income, whatever they want. But the point really is you're a lot more likely to tax the stuff that you walk past, every day on the way to work. And legitimately, you can move yourself and you can move your property, if it's crypto, to another jurisdiction, but you can't legitimately move a ranch in California. So your property rights are stronger and the value of the property is higher. Right? You have a valuable thing in Manhattan. It's interesting to other wealthy people in Manhattan, but when you have Bitcoin, it's interesting to wealthy people everywhere on earth. Right? You can liquidate $1 billion of Bitcoin on the weekend in any currency, any time. Try liquidating $1 billion building, right? That's a 3-year process, right? So it's liquid, it's fungible, it's desirable, and so that's what makes the asset valuable. And it's the most difficult thing to impair. Tom, once I had $1 million seized by the Argentine government. Here's how it happened. I had $1 million in a bank in Argentina in dollars, and it was a U.S. bank. On one day, they simply passed a law converting it all to pesos, and they converted everybody's account to pesos in the country. And the next day, they devalued the peso 10-1. And 24 hours after they'd done that, I had 100,000, whereas I had $1 million before.
Ooh.
And they did it. I mean, they did it quickly and easily to everybody in the country. Now, in theory, if it had been property, they would have had to pass a law seizing 90% of the property of everybody in the country. That would not be so popular, right? To seize the property. And if they wanted to seize 90% of the property of everything in the country, they would have had to subpoena a court in New York or Delaware and get my appearance, right? And there would have been 3, 4, 5 years of lawsuits going on. And if you really wanted to take something, you have to kidnap everybody and take them to jail and sweat their private keys out of them. And that's not very practical, right? So at the end of the day, it's not likely that the governments of all the world will just confiscate 90% of your crypto assets or your Bitcoin. But in fact, it's a foregone conclusion that they're definitely going to compensate 90% of your currency. Right? It's happening at 1% a month or 2% a month right now. So all you got to do is wait between 5 and 10 years, and you're going to lose 90% of your of your money if it's in a currency or a currency derivative. And they don't even have to pass a law.